To start things with a tweet from Walter. David, could you please comment on SQ, Square?
So, Walter, I think people know that at Barometer we're very focused on trying to identify structural themes in the economy, changes that are taking place that go well beyond a business cycle. And we try and focus in those areas because they tend to have tailwinds for many years. And of course, one of them has been digital payments, and Square fits firmly in that camp. We're investors in, Shopify, in Visa. We've been investors in Square, and Square fits really right into that camp. Stock's behaving well. It certainly pulled back to the moving average through the correction, and is turning up nicely, from it. It's been stronger than 98% of the stocks in the S&P 500 in the last 12 months, and they have a really solid growth rate. So I think that as long as you're in that neighborhood, you've got a tailwind. I think equity market's getting better, and Square is one of the leaders in the group.
I know when investors take a look at a run in the past 12 months of 202%, they're afraid they missed the boat. You think still opportunity ahead? Look,
in a bull market, the first stock to double is the first one, next one to double again. Don't be afraid of strength in a bull market. Growth stocks can go a long way, and I'll just use a simple example. In the bull market in the 50s and 60s, multiples started to expand, and people started to look for things with dividend growth. And by the end, in the Nifty 50, they traded at 60 to 80 times earnings, companies like McDonald's and Walmart. So, these multiples across their various leadership groups are expanding. They can expand for a long time, and sometimes it's because the estimate is just simply too low. If the estimate's too low, the PE isn't as high as people think. And so this group, continues to have real sponsorship, and there's several companies that are benefiting from the growth in digital payments, and that doesn't appear to be slowing down anytime soon.
All right, that was Square. We have Larry on the line in Toronto. What's your question, Larry?
Hi, good afternoon, gentlemen. Thank you for taking my call. My question is on Applied Materials. Everything I can see, it looks pretty good fundamentally. Just wondering why it dropped over 5% today. I can't find any news about that. David, could you please give me your comments? Thank you.
Sure, Larry. So semiconductors have been, pretty clear leadership over the last 2 years, really since February of 16. They have become more volatile over the last few weeks. I think that what you're seeing is you are seeing some money leak away from semiconductors, a little bit of money leak away from some financials. Not to say that there's a real problem there, but people are trying to find cash to go and buy some energy and materials, also economically sensitive companies. I think they're all going to be okay. I think semis are going to continue to perform really well. The XSD, which is an ETF tracking a broad basket of semiconductors, also pulled back with the group a little bit today. But the relative price strength versus the rest of the market has been very, very good, and I think that you're probably okay in the group.
Yeah, it seems that another player in the space today, Lam Research, which is a chip manufacturing equipment maker, just like Applied, said their shipments are expected to decline. So it seems it was a guilt by association. One of their competitors didn't have good news, and Applied Materials maybe got caught in that downdraft.
And these are all sort of the picks and shovels of the semiconductor industry. These are the folks that make equipment to make semiconductors.
All right, Henry on the line from Hamilton. What's your question, Henry?
Good evening, gentlemen. iRhythm came to my attention around 63, but it seems to be in a range, 61, 63 since.
Yeah.
Do you like it? Do you own it? Product looks good, but if price is truth, what's keeping a lid on the stock? Thank you.
All right, good question.
Henry, that's a very good question. So across the sort of leadership themes in the market, medical devices and especially med tech are right at the top of the list. You can look at an ETF like IHI, which is the medical devices ETF, and it's been dynamite. I'm going to talk about a medical devices company today. We own iRhythm. iRhythm makes a patch that you put on your skin. It monitors your heartbeat for atrial fibrillation, and then transmits it back to an app where they use AI to determine whether your heart rate is showing that there are issues or not. The outcomes, the patient outcomes, are like 3 times as good as the next best technology. And iRhythm has only about 6% of the US market and hasn't addressed international markets yet. So this is one that we really like. Let's be clear, we've been going through, I think it's 58 or 59 days of correction since January 30th. Everything was impacted to some degree. iRhythm did not break down technically. It held in very nicely. So I like the group, I like the stock. I would buy the shares here, and we own it currently.
Interesting name. We'll be back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions about North American large cap. So call us toll free, 1-855-326-6266.